What if the world turned to Bitcoin? The Bitcoin apocalypse. The idea of a world fully reliant on Bitcoin is an intriguing one. While Bitcoin began as an experimental digital currency, it has evolved to become a widely discussed alternative to traditional financial systems. But what would it mean if Bitcoin became the primary currency of the world? In such a scenario, sometimes referred to as the Bitcoin apocalypse, global economies, financial structures, and even social norms could undergo seismic shifts. Here, we explore the potential impacts of a world that has turned to Bitcoin, the benefits, the risks, and the societal changes that might follow. 1. The rise of a decentralized economy. What is a decentralized economy? Bitcoin is built on a decentralized blockchain network, meaning it is not controlled by any central authority, such as a government or bank. In a Bitcoin-driven world, this would translate to an economy free from traditional regulatory bodies. Instead, the system would rely on peer-to-peer transactions and a trustless network, where every transaction is verified by users across the globe. Benefits of a decentralized economy. Financial sovereignty. Individuals would gain more control over their money, as they wouldn't need banks to hold or transfer funds. No inflation or hyperinflation. Bitcoin has a finite supply of 21 million coins, which would prevent inflation and devaluation, in contrast to fiat currencies that can be printed indefinitely. Reduced transaction fees. Bitcoin transactions eliminate the need for intermediaries, leading to potentially lower fees and quicker transfer times, especially for cross-border payments. Challenges of a decentralized economy. Lack of regulation. Without oversight, fraud and crime may become harder to control, leading to a rise in black market transactions. Volatility. Bitcoin's price volatility could make daily transactions unstable, impacting everything from consumer confidence to investment markets. 2. The collapse of traditional banks and financial institutions. Why banks could become obsolete. If Bitcoin became the world's primary currency, traditional banks and financial institutions might struggle to find a role. The decentralized nature of Bitcoin would remove the need for centralized entities to store, lend, or verify funds. In a world fully reliant on Bitcoin, people could simply use digital wallets, bypassing banks altogether. Implications for the financial sector. Job losses. Millions of jobs in banking, finance, and related services could become redundant, leading to mass unemployment and economic uncertainty. End of lending and loans. With Bitcoin, lending models would have to change. Without a central bank, it would be challenging to set interest rates, and loans might only be available through peer-to-peer systems. Disappearance of credit. Credit-based systems, like credit cards, may cease to exist, as Bitcoin requires that all transactions are immediately settled. This would alter the way people spend and invest. New opportunities in the Bitcoin world. Despite the collapse of traditional finance, a Bitcoin economy could create new industries, such as digital security, blockchain management, and peer-to-peer lending platforms. 3. Bitcoin and the environment. Energy demands of a global cryptocurrency. Energy consumption of Bitcoin mining. Bitcoin mining requires massive computational power, which, in turn, consumes vast amounts of electricity. A global economy driven by Bitcoin would likely see this energy demand increase exponentially. Environmental impact. Increased carbon footprint. Bitcoin's energy consumption could lead to higher carbon emissions unless mining operations shift to renewable energy sources. Strain on power grids. Countries might face energy shortages as more power is diverted to Bitcoin mining, which could impact industries and households. Potential for renewable innovation. To counter the energy drain, there may be a push towards renewable energy solutions and innovations to make mining more sustainable. Solutions to Bitcoin's energy problem. Technological advancements, such as proof of stake or energy-efficient mining algorithms, could help mitigate the environmental impact. But these technologies would need to evolve quickly to meet the demands of a Bitcoin-based global economy. 4. Economic inequality in a Bitcoin-dominated world. The distribution of Bitcoin wealth. Bitcoin is already known for its uneven distribution of wealth. Early adopters, large institutions, and wealthy investors hold the majority of Bitcoin, while new users own only a fraction. A transition to Bitcoin as the global currency could deepen existing inequalities. Consequences for wealth distribution. Early adopters become new elites. Those who invested in Bitcoin early could become the new global elites, as their wealth would multiply in a Bitcoin economy. Barriers for new users. Individuals without access to technology or the means to buy Bitcoin may be left behind, worsening socioeconomic disparities. Potential for wealth redistribution mechanisms. Without governments or banks to impose wealth redistribution policies, inequality could rise unchecked. Can decentralization balance inequality? Decentralized finance, DeFi platforms could provide more people with access to financial services, loans, and investments, potentially reducing inequality. However, these solutions may only partially offset the wealth concentration among early Bitcoin adopters. 5. Privacy and surveillance in a Bitcoin economy. Increased privacy for users. Bitcoin transactions can be pseudo-anonymous, allowing users to keep their identities concealed. In a Bitcoin-driven world, privacy in financial transactions could become more accessible, providing individuals with a greater level of personal freedom. Pros and cons of financial privacy. Pros. Greater privacy protects individuals from surveillance, data breaches, and identity theft. Cons. Privacy could facilitate illegal transactions, tax evasion, and money laundering, posing challenges for law enforcement agencies. Governmental response and regulation. Governments might develop new tools to trace and monitor Bitcoin transactions, leading to a tug-of-war between user privacy and regulatory oversight. This tension could redefine personal and financial privacy standards worldwide. 6. The role of technology. Adapting to a Bitcoin-driven economy. Adoption of digital wallets and blockchain solutions. In a world that relies on Bitcoin, digital wallets would become a necessity. Every individual would need a secure wallet to store and transact in Bitcoin, leading to widespread adoption of blockchain-based applications. Technological advancements to support a Bitcoin economy. Enhanced security protocols. Protecting wallets and blockchain transactions from hacking and fraud would be critical, leading to advancements in cybersecurity. Decentralized applications, dApps. More decentralized applications would emerge to support everything from identity verification to asset management. User education. For Bitcoin to function as a global currency, people worldwide would need education on using digital wallets, understanding private keys, and securing their assets. 7. Geopolitical shifts and global power dynamics. Impact on national sovereignty and monetary policy. A Bitcoin-based world would erode the ability of governments to manage their own monetary policies, as they would no longer have control over a national currency. This could have dramatic impacts on national sovereignty, particularly in countries that rely on currency manipulation to manage economic stability. Global power redistribution. Loss of power for central banks. Central banks would lose their ability to set interest rates, print money, or manage inflation, weakening their control over national economies. New global players, nations with a strong technological infrastructure or access to Bitcoin reserves, could gain influence, while countries without these resources might struggle. Rise of supranational governance. Without national currencies, international organizations or alliances could emerge to set global economic policies. The future of sanctions and international relations. With Bitcoin, international sanctions could become harder to enforce, as countries could bypass traditional financial systems. This could fundamentally alter diplomatic relationships, as governments would need to find new ways to exert influence on the global stage. Conclusion. Is a Bitcoin-only world feasible? The idea of a world powered solely by Bitcoin is both fascinating and daunting. While Bitcoin offers unique benefits like decentralization, financial sovereignty, and low inflation, the challenges it brings are equally significant. From environmental concerns and economic inequality to privacy risks and geopolitical shifts, a Bitcoin-only world would require massive adaptations across every sector of society. For Bitcoin to become the world's primary currency, technological, regulatory, and societal advances would need to keep pace with its adoption. Such a transformation would undoubtedly reshape the global economy, but whether it would lead to a utopia of financial freedom or a dystopian Bitcoin apocalypse remains to be seen.